Hey, welcome everybody. Paul Benson here. Now it's Market Noise, and as regular listeners would know, I'm not usually the one that does the introduction. That's usually my partner in crime, Justin. But for those perhaps watching live, you will have already seen that Justin's not here tonight. Tonight I have someone else. I have Ethan, who Ethan
G'day.
he's been involved with the podcast for a while. Yeah, say good day, Ethan. Sorry.
How's it going? Good to be on.
So
Great to be here,
Ethan,
Paul.
yeah. So Ethan ordinarily edits the podcast. He's done that for years, the Standard Wednesday podcast. He works in our financial planning business as a parrot planner, and of course, very importantly, he's also my son. So it's a family affair tonight, and he stepped in at short notice to help out. So thank you very much. Yeah, Justin. He works in the aviation industry, and with reopening and stuff, he's just absolutely under the pump, and so quite reasonably, he needs to dedicate his focus to his day job. Which pays the bills. So he's going to be occupied with that at least until the end of the year. So members of the financial autonomy community, you probably will have seen on Saturday, I put out an email Saturday morning asking for guest hosts. And thank you for those who have responded. And I'll be getting back to you this week and scheduling weeks for you to jump on. If you haven't responded yet, check your emails. As I say, early Saturday morning, I sent that out inviting hosts, and I'd love to have you jump on if you're interested in markets, which I imagine you are, and that's why you're listening to the podcast. If you're not getting our emails, it's financialautonomy.com.au/gaining choice. I will have another link to it on the Friday morning email, the Gaining Choice email, so you can jump online there. So yeah, it's going to be a little bit different. Same basic format though, picking up topics, two of us going back and forth. But we're just going to have some different hosts and vary it up a bit over the next few weeks and really through until Christmas. And first cab off the rank, we've got Ethan. So thanks again, Ethan.
Yeah.
So look, how about we first jump into our first topic, which is net zero. And there's a great story here about just what a goldmine that this could potentially be for particularly the Australian resources sector. And we have spoken about this in past weeks on Market Noise, but at the moment, as everyone would be aware, there's a lot of debate around Australia getting on board with the net zero piece. And so this article had some fantastic figures. So it talks here about Australia's in pole position to benefit from a six-fold increase in demand for so-called critical minerals worth US $12.9 trillion over the next 2 decades. And that's driven by a race to hit net zero emissions, and that's according to the IMF, who should be able to do their numbers. What do we got here? The World Economic Outlook out of Washington projects a steady 15% increase in metal price index, which will bolster Australia's economic growth by 1 percentage point, further strengthening the government's prices. Prices would reach historical peaks for an unprecedented, sustained period under the net zero 2050 emissions scenario. Prices of cobalt, lithium, and nickel would rise several 100% from 2020 levels, the report said. So quite incredible, the potential upside there. As I say, we have talked about this a little bit in past episodes, but really interesting to put some numbers around that. Ethan, did you have a chance to look at this one, and what did you make of it?
Yeah, I did. I think it's really, really interesting that, we sort of are able to lead the charge a bit on this one. Especially we've had sort of the mining boom in the past, and often it's sort of looked at as BHP and these companies contributing to climate change, and you see it in their advertising these days. They've been doing it on the TV. I've noticed they're a lot more focused on this renewable image, and it seems like that's sort of, judging by this article, that's definitely a valid point to raise, and something that we can be contributing to as a nation.
Yeah, and I mean, obviously, you're of a younger generation. Is that sort of stuff being talked about at all amongst your sort of cohort?
I would say it is, but I wouldn't necessarily say it's led necessarily by us. I think a lot, you've got some people that are particularly vocal around it, but I think it's it maybe doesn't get as much credit, but I honestly think it's sort of Gen X, Gen Y are more leading the conversation here. I think we've definitely got some vocal advocates in my generation, but at least in my experience, I've found that it's often been, teachers and that sort of a thing that have led the conversation on these issues, which I don't know, sort of
That's probably
unique.
fair enough. Probably.
Yeah.
Yeah. Yeah. I mean, I just think it is. Obviously there's struggles and discussions, and obviously we don't do politics on this show, but I get some of the stresses around, is it in trying to get to net zero, is that going to cost jobs, that sort of stuff. But it's just really interesting to see pieces like this that present, actually there's a whole ton of opportunity, a whole ton of new jobs and just general wealth for our country. And we've got to get over short-term issues and job dislocation and those kind of concerns, I understand, but there's some real upside here economically. And I mean, that's not the reason for doing it, is to save the planet and global warming and all the rest. But it's interesting that actually there's some good economic opportunities that should flow, and Australia should be a really big beneficiary, it would seem.
Yeah, exactly.
All right. Well, look. Yeah. All right. Well, look, that's the net zero gold mine for Aussie miners. I thought that was one that I found interesting. How about you, Ethan? What's one that sort of caught your eye this week?
Well, so one that particularly caught my eye was, China has recently published a code of ethics for their AI. So this is sort of focused on, it seems particularly based around the science fiction writer Asimov, his laws of robotics. So it's particularly around things like, having to accept the service of artificial intelligence and avoiding Terminator, essentially. And so yeah, I think it's quite an interesting thing in terms of, we've got self-driving cars coming up and that sort of a thing, and just the practicality of having these laws, and will that sort of how will that play out for countries,
Yeah, because there's a fair bit of talk around that about how you avoid AI soldiers and how they prioritize human life and these type of considerations. Does it have I don't have the piece in front of me, but that I recall that, the Asimov sort of had 3 rules or something or other, didn't he? Like, does that piece have
3 laws? Yeah. So,
laws,
the first law, so a robot will neither harm a human being nor by inaction allow a human being to be harmed. And that's been quite an issue with self-driving cars. They've got that, I forget what business it is, but they've got their sort of online survey you can do where you sort of decide those things of like, do you swerve to hit these people or these people, sort of a thing. And, sometimes it is unavoidable. And so that's an interesting one. The second law, robot must carry out the orders given by human beings, except for those that conflict with the first law. And then the third law, a robot must protect its own existence to the extent that this protection does not conflict with the first or second law. So,
basically humans take primacy and then sort of step it down from there. I mean, it's interesting, isn't it?
The hierarchy there.
Yeah, it's interesting that a science fiction writer could create a framework like that ultimately comes to fruition and gets adopted. So how in line is what China's proposing with those 3 laws? I mean, have they just adopted them entirely, or how does it line up?
So it's not exactly the same, but it's definitely, you can feel that, either directly or indirectly, perhaps it's a societal sort of, these laws are just so ingrained within us that at this point that sort of they've by osmosis almost implemented them, but it's pretty similar. It's not exactly the same, so they've definitely fleshed it out a bit more. But yeah, it's very in line with them, broadly speaking. And yeah, I guess in terms of markets more broadly, I guess it'll be interesting to see how these restrictions will be enforced, and sort of how because I'm sure at some point one of them will be broken, and how that'll affect public opinion of things like self-driving cars and that sort of a thing.
Yeah, that's right. I mean, there's lots of robotic businesses. Just the other week we had about Amazon's new little home robot and self-driving cars and Tesla and all these type of things. It's certainly going to become more and more an issue, and no doubt more and more there'll be some challenges that regulators and just society is going to have to battle. But certainly you'd imagine that there's going to be some companies on the stock markets around the world that are going to make some big money out of some of this sort of stuff. So yeah,
Absolutely.
definitely.
Yeah, it's a market to watch. Yeah.
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 No,
Particularly
nice.
China wanting to be a leader in it, it seems.
Yeah. Makes sense. No, well done. Nice pickup. Hey, and I should have mentioned at the start too, if you're watching this live and would like to share your thoughts, we'd love to have your input. That's the reason that we do create this as a live event on YouTube. So yeah, if you're watching live, let us know what you think on any of the topics, and we'll get you involved. All right. Well, look, the next topic I had is quite a different feel to it, but it's called Investment Markets Pop. Now, I wonder if that's going to... There we go. I don't know why that's not going across the screen. Anyway, you might tell ordinarily Justin manages things screen-wise, and I'm having a first go at it, so bear with me. But the big investment platforms administrators in Australia, which is Netwealth and Hub24, updated their results during the week. And they were very strong results indeed. And their share market kicked along quite considerably as a consequence. In fact, I'll see if I can pop it up here on the screen. There we go. The blue there is Netwealth, and the orange is Hub24. So, yeah, really sharp steps up. Netwealth advised that their funds under administration grew by $4 billion in the September quarter. So that's more than $1 billion a month they grew by. Funds under administration now $51.9 billion. Hub24 is a little bit bigger. They hit $63.2 billion, although Netwealth seems to be growing a little bit faster. But super interesting that this is an interesting side effect of the Hayne Royal Commission. Of course, prior to that, most of the administration money was done by the big banking groups, the BTs, the Colonial First States, maybe a little bit of MLC. They were the main players. But the Hayne Royal Commission, the banks shut down their banks. All of a sudden, financial planners, there are fewer financial planners than there used to be, but of those that are still with us, had a lot more choice as to where they wanted, which administration service they wanted to use for their clients. And certainly I know in our business, we did quite a bit of due diligence and shopping around and to choose, we use Netwealth as our preferred administrator, as you would know, Ethan. Clearly we're not alone. A lot of investment advisory firms have done the same thing. And Netwealth and Hub24 have been enormous winners from this change. They're just independent fund administrators. That's all they do. They're not tied to a bank. They don't have the conflicts that we used to see, and they've been embraced for it. And certainly, we're really happy they do a fantastic job. But it's just it's not something that would have necessarily been obvious when the government announced, hey, we're going to have a Royal Commission into the banking and financial services sector, that these independent fund administrators would be possibly the biggest beneficiaries of the lot. What did you make of this one, Ethan?
Yeah, well, it's as you say, it's sort of interesting after a investigation that sort of turned out relatively negative, it seems, for the overall financial sector, that a major winner was a finance companies. It's an interesting sort of proposition there. And especially, I guess fintech has been doing really well already. These Netwealth and they've been doing well as is. So I guess it's a continuation of that trend. What do you reckon? I don't know. Do you see it continuing to go up, or do you reckon it's sort of, I don't know. Do you reckon we're towards the peak of this trend for fintech?
Well, I wouldn't have thought so on a couple of fronts. In terms of these administrators, they still, as a total market share, and I haven't got those numbers in front of me, but I think I read they were 4 to 5% of the Australian market each, something like that. So that suggests they've still got plenty more market share that they can get. Now, obviously, I can't comment on where the share price is going to go, as the listeners would know. We don't give advice here; it's general information. But certainly, as I understand it, they've got plenty of room to grow in terms of funds under administration, and it's a growing pie because there's always superannuation contributions going in. Now, of course, there's pension payments coming out, but at least for the moment, there's more going in than coming out. So there's a growing pool of money that needs to be administered in Australia. and they would seem to have plenty of room within the market to grow. And clearly, for the traction that they're getting, the flows that they're getting, tells you that their products are excellent and are superior to the old products that used to be around. And that's certainly been our experience. So, look, I think they will continue to grow, and I think they'll continue to expand, and that's great. I mean, the more money they make, then they can invest it into further developing their products and their services, and that's great for our clients and great for us.
Yeah.
So
great for everyone who's under them, really. Yeah,
that's right. Cheering them on for sure. All right. How about you? You kick one off. What you got next, Ethan?
Cool. Well, so bit of a smaller topic here, but so just an interesting little story about the timber industry in the EU. Sorry. So it's been interesting with the EU climate goals. Sort of part of that, they've been really encouraging, the use of more sustainable materials such as wood for building. However, it's come as a bit of an issue lately that the EU, as a part of this whole sustainability thing, they want to try to be managing forests more, like outside of the national management. So sort of have the EU manage the forests and timberlands and stuff. But obviously, the nations don't want that, and sort of it's a bit of a competing goal there within the EU of, well, do they, how much can they afford to put to conservation versus how much can they afford to put to, using it for sustainable means. It's sort of a bit of a competing goal, within itself.
And there's all sorts of tricky elements.
Yeah,
there's tricky elements there, isn't there? Because I guess in terms of the whole carbon emissions, your forests are part of your ability to absorb carbon dioxide, I guess. So
big carbon
I guess
sink.
there's the carbon sink element. That's right. So I guess that would be a reason. On the flip side, though, timber is at least a sustainable building material. It's going to grow back. You cut it down. I mean, it looks a bit ugly when they harvest the areas. We saw that a bit bright up at Christmas, but it is something that grows back. So in that sense, it is a renewable one. Yeah, I can see how they could end up in a real pickle there. That's a really interesting story, isn't it? Yeah. I like it. Nice one. What else you got? You got any other little snippets there?
Oh yeah, sure. Yeah. So another one, India's explosion of tech IPOs. So pretty lately, Zomato, sort of, they're a food reviewing one, aren't they?
I've heard of them, but I don't know much about them.
Yeah, I'm not 100% sure what they do. Probably should have looked it up. But I believe they're a food reviewing one. They've recently gone public, and it's been interesting. A lot of Indian tech IPOs, are starting to pop up, and they've seemed to be quite profitable. For investors, they've been quite a high market cap, and
so they're listing in India, or are they Indian companies listing in the US or elsewhere?
Listing in India, from what I understand. Yeah, so it's interesting as a developing market that it's the tech industry yet again that seems to be really popping off there.
Yeah, I mean, India's been known for a long time for its tech skills, I guess particularly outsourcing and that sort of stuff. So you kind of understand that fits, and I don't know, perhaps no idea about their stock market system, but you'd imagine it's probably based on a Western system, so it would probably sort of fit with what other systems are doing. No, that's really encouraging, and obviously such an enormous population in India that if the people can get involved, you'd imagine it could really push things along.
We've got a comment here. Show me Melbourne, Zomato are indeed food reviews and delivery. I thought so.
There we go. Yeah, excellent. Thank you for confirming that. So this is why audience participation is so good.
That's why we need an audience. Yeah.
That's exactly right. So yes, thank you there, Show Me Melbourne. Excellent contribution. All right, well, look, how about I take a swing at one? This is,
go for it.
I mean, possibly some people would say the biggest news of the lot this week, which is they're sort of interrelated. Bitcoin's been shooting up, and we spoke about that a bit last week. Just looking here for the month, Bitcoin's up 31%, which is pretty good in a month. Ethereum's up 12.9. So it's definitely, there's broadly cryptocurrencies are up, but Bitcoin's the real standout. And the driver for that is an expectation that the Securities and Exchange Commission in the United States is poised to allow its first US Bitcoin futures exchange traded fund to begin trading. This is quite an interesting piece. I guess for a lot of investors, been keen to have an ETF opportunity to get into Bitcoin because they've already got their share trading account. Creating an account to buy crypto is perhaps considered a bit of an inconvenience. And so if you could just do it with your existing share trading account, that would sort of hold a lot more appeal. And so they've been waiting for an ETF, but the regulators, both in the US and Australia, continue to knock it back because there's concerns around the security of the market and fraud on the blockchain and some of these sort of things, which of course the diehard crypto people will say, no, it's never going to happen. But anyway, the regulators feel that it could. So the Securities and Exchange Commission in the US has been pointing to the fact that, look, we are struggling to get comfortable with that, but we would accept an ETF over the futures market because that is a regulated market and we get a bit more comfortable with that. Now,
explain to us the futures market. Explain to us the futures market. What does that mean for everyone out there?
Yeah, so it's an interesting area. So it's agreeing to buy a certain commodity typically at some point in the future at a particular price. So, I mean, it was born out of particularly farmers. They plant their wheat crop and they needed to know, even at the point of planting, look, how much am I going to get per ton of wheat? They couldn't afford to wait until they grew it all year, put all the fertilizers on it, whatever they had to do. And then at the end, they find that actually the price they get doesn't justify all the effort. So therefore, they establish a futures contract. Right, we'll sell it for no idea, but whatever, $500 a ton. There's a contract that set out at the beginning, and then the farmer knows this is what he's going to get when he harvests it. So that's the original idea. And these days, there's futures contracts for oil, all sorts of commodities, but there's also futures contracts around financial instruments. So there might be one, for instance, around the S&P 500 or something like that, the ASX 200. So those kind of ones are, I guess, a little bit speculative. Some people might use them for hedging purposes, but they can be a bit speculative. So the idea with this futures contract is, okay, there might be a futures contract for Bitcoin expiring in December at a particular price. And so the ETF can cover that through those futures contracts. What is a little hard to sort of get your head around, and I haven't got my head around it totally, is surely the intent with these futures contracts is that there's the potential to deliver the item at the end. Now, usually that's not what happens. Actually, someone just buys the other side and cancels it out, and then they make the profit or the loss, depending on how it plays out. But nevertheless, the intent is that there's a potential for actual deliverability of whatever the item is that the futures contract is over. Now, if the regulators are saying, well, we don't trust Bitcoin because it's all a bit shady, they perceive, shady is not the right word, but they don't have confidence in it. It's not a regulated security.
Unsecure.
Yeah. But the futures contract, okay, it's kind of one level above, so it kind of solves that as far as the exchange traded fund, but still underlying the futures contract, for it to really work properly, there still has to be a confidence that there's the potential for that to be converted to actual Bitcoin. It would probably never happen, but you need that mechanism, which kind of implies, well, the market must function okay for Bitcoin, because otherwise you couldn't have the futures contract in the first place. It's an interesting solution, but
I guess it's all ultimately, I mean, it's quite the thing to do at the moment. I know both of us have both purchased some crypto, and it is quite a challenge to sort of get into it, like to sort of figure out, okay, who am I going to buy it through? Do you do your digital wallet? Do you get a hard copy of it? So it is good to have a solution that is an ETF, a lot more simple for everyone out there to be able to get at least a foot in the door with it. But yeah, it's sort of, as you say, it's not quite the same thing though.
That's right. You could get a situation where you buy this ETF, and your experience as an investor, the futures contract doesn't necessarily have to move exactly in lockstep with the actual underlying Bitcoin. just because of different maturity dates, or just because of concerns about is this going to be deliverable and various issues. So it feels an imperfect solution, but I kind of understand why they've got there, and maybe it's just a short-term kind of workaround. But certainly
in 10 years or something, we'll have one for proper crypto, you'd assume.
Yeah, and that probably just requires that Bitcoin and others actually end up more regulated, perhaps. But yeah, look, it's an interesting one. It's definitely having an impact on the Bitcoin price. So Bitcoin now in US dollars is $56,000 for one Bitcoin. And what's that? Just let me pull out this chart a little bit further, because it had been, so the previous high, which was back in April,
it was 65 grand, wasn't it?
Yeah, something like
65 US, I believe.
Somewhere around there. So we haven't quite got to the previous high, but we're getting pretty close.
After a really big low for a bit there.
Well. I'm wrong, sorry. It's currently 61, almost 62,000. So it's extremely close to the previous high set back in April. And then, who knows? Perhaps it's ready to continue to step up. The talk has always been about Bitcoin getting to 100,000, I guess, just because it's a round number and it's still a fair way to go there. But yeah, certainly a fair bit happening in that crypto space.
Sphere.
How about, have you got any other little snippets you want to share?
Yeah, I do. So this is one this has affected me personally. So I felt the need to bring it up on here to moan about it. I know I mentioned it to you. Freaking petrol prices through the roof at the moment. There's predictions that it's going to go up to $2. I was driving today. I saw it was like $1.82 for petrol, and it's at an all-time high across the country in Melbourne, in Sydney, basically everywhere. It's really high at the moment, and so yeah, I just wanted to discuss that. I mean, what do you think about it? Do you reckon it will reach $2, or I don't know. I can see it.
It's hard to say because the oil price swings around a lot. I mean, Justin and I spoke last week. 18 months or so ago, oil had a negative price, which is just bizarre. So oil swings around a fair bit. I mean, there's different drivers for that at the moment, and they're so linked. Gas prices and oil prices and things, they all kind of work off a similar kind of trading mechanism. So it's energy prices broadly, and I guess that feeds into some of these discussions, the net zero discussions at the moment, and talk about our coal being in pretty high demand and getting high prices, and some people using that as an argument to want to continue in that space. So all different forms of energy are expensive at the moment. Globally, there's obviously a challenge there. I guess part of that is the world opening back up again post-COVID, and the production associated with that. We hear a lot about shortages of different things. Computer chips you hear about a lot. So presumably there's a lot of factories.
Lately.
Yeah, so presumably there's a lot of factories working overtime, and there's just a big need for energy at the moment. I mean, hopefully what it drives is more investment in renewables.
You'd hope so.
Because
you go.
I was just going to say, you'd have to imagine countries like China, who don't have a lot of fossil fuel type energy, when prices go berserk like this, they would have to surely think about, gee, how can we become more self-sufficient? And the obvious way to do it, if you don't have just natural minerals, is renewables, things like solar, like wind. You just got to find the space for them. But a place like China is pretty big. But surely countries are going to head more and more towards self-reliance and more resiliency. Yeah.
Well, particularly like Show Me Melbourne here has said that they haven't put petrol in their car for a month, and they've missed this big price hike. But you've got to think, I don't know, if it kept going this way, I reckon that's a pretty damn good incentive for people to be switching over to at least hybrids, if not electric cars as well.
Yeah, that's true as well. And I guess it's also interesting. Yeah, sorry, you go.
Yeah, like if it stayed really high, there is often sort of a bit of a discussion around the trade-offs of the pricing of electric and fossil fuel based cars. How how much it does actually save you. And you
Mm.
know, if petrol prices are like this, well, it'll save you a fair amount, won't it?
That's
You'd
right. It
assume.
makes the argument a bit easier to make work,
Lots,
doesn't it?
lots,
So
yeah.
yeah, no, interesting discussion, and yes, something you might be moaning about for a while yet. I mean, you'd have to imagine
Yeah.
that most of Melbourne's been in, theoretically at least, been in lockdown, well, for forever, but especially for the last few months. So we should have been using less petrol the last several months, and that's all going to change as of Friday. So
and it seems to be
there
an
you go.
international thing as well, that petrol prices have been high throughout the year. So I think it's sort of, you know, on a broader scale, people coming out of lockdown has really, hiked the prices up. I guess production hasn't quite caught up with the demand of a bunch of countries now reaching their vaccination targets and opening back up and that sort of a thing. I guess for a little while at least, until they can get production back up, it will be high.
Yeah, you'd have to think so,
globally.
wouldn't you?
Yeah.
Well, I mean, somewhat along those lines. There was one here that caught my eye, which was around hydrogen, and I guess this aligns a little bit, or quite a lot actually, with my starting point around just the potential that some of this energy transition presents for Australia. So during the week, New South Wales set sights on an $80 billion hydrogen investment. Up to $3 billion of incentives will be on offer from the New South Wales government as part of a new strategy for hydrogen in the state that the government expects will help attract more than $80 billion of investment in clean energy by 2050. So hydrogen is an interesting piece. My understanding, and I'm certainly not an expert, but that for Australia, don't need hydrogen so much because we've got the benefit of a lot of potential for renewables. But in countries, particularly South Korea, I understand, and I think to a certain extent Japan as well, less opportunities for those type of solutions. And so hydrogen is perhaps a solution that might appeal to them. And South Korea and Japan are historically pretty big buyers of our coal. So this is definitely a potential substitute industry away from coal. And it just really highlighted potentially some big spending, some big opportunities, developments, and I guess a whole lot of new jobs there as well. And it's certainly something that it looks like the New South Wales government is pretty keen to jump onto. Did you have a chance to have a look at this one at all?
I did.
What did you make of it?
I think it's really interesting, the sort of the development there in terms of hydrogen. You know, for so long it's been the sort of thing of like, I remember we learned about it in high school physics, you know, back in the day, last year.
Back in the day.
You know, it's for quite a while been the sort of thing where theoretically it would be great to be generating energy from it, and the fact that we're starting to get there is really encouraging, just by the amount of energy it can produce, and you know, most abundant resource in the universe. You know, it's got a good look to it, you know.
Absolutely. Yeah. No, it's an interesting space. So yeah, look, that's just another potential opportunity for Australia. It really does. There feels like there's some great potential, a great future here for us as things are unfolding. Getting past COVID, and hopefully that makes us attractive from a tourism destination, perhaps skilled migrant destination as well, and then all these potential growth industries that we've got available to us. It's I think we might be in a pretty good place, a pretty good part of the world, Ethan, especially for someone like yourself who's got to get into the workforce over the next few years. So
with all these renewable energy talks, you know, we should be prime position to be booming in the next couple decades.
Right. Exciting future, huh? Look, I might just finish off with, I guess it's a crypto-related one, but this is a piece that was in the Fin Review on the weekend that I just thought was really interesting, an entrepreneurial type one. So this is a newish company that hasn't quite sort of gone live yet, but they're working on it. They're called pre-PO instead of IPO, pre-PO. It sounds a little bit kind of Star Wars-ish as well, but I don't think that's where they're trying to head. But the idea,
pre-PO, hey?
Yeah, something like that. Yeah. But the idea is, and they give the example here of Canva, who, of course, many of us would use design software that's very easy to use.
Mm.
And I think it's one of the biggest private companies in the world, if not the biggest at the moment, valued at
Mental.
Aussie $55 billion, so worth a heck of a lot. But it's not currently on any stock market. It's still a private company. So there's no ability for us investors to access a business like Canva. So this company pre-PO is intending to effectively, it appears that you're betting on what the future price will be, as best I can tell. They're doing it on a
it seems that
blockchain,
way,
and
didn't it?
that's the crypto angle. But yeah, you're able to get on there and essentially, say, all right, I want to, for instance, Canva, and by over the next 12 months, want the price or the value to be X. And if you're right, then you get a payout. And if you're wrong, well, you don't, and you lose the bet. And there's opportunities to roll them over each 6 months or 12 months or whatever you want to do. I encourage you to check out their pre-PO website, because I probably totally made a mess of their business case. But I just thought it was really interesting. It is. But it's an interesting topic, because there has been quite a lot around the fact that a lot of the best money is being made by people on the inside before stocks get to list on the stock market, and normal people like you and me can actually get a slice. And yeah, by the time it's readily available and it goes on the S&P 500 or, goes on Wall Street, goes on the Australian stock market, actually
we've all missed out, sort of a thing.
It's almost maxed out. Yeah.
Mm.
And so, which is obviously a frustration. And so that's what this is trying to solve. And they give examples of SpaceX, of Stripe, different other crypto sort of projects, but just giving the ability for people to get in there and participate, even where it's not listed on a stock market. And I just thought it looks really interesting, and it's certainly one that I'm going to follow. Did you have a bit of a look at it?
I did, yeah. It's sort of it's quite similar to you talking about futures before. It feels quite similar to that, doesn't it? Sort of like betting on when it'll be public by this date, and we're going to buy in at this price. It feels quite similar, and I guess to me at least, from my limited investing experience, it seems very. I don't know. I'm not sure I'd be all that confident in it. Like, how do you feel about investing in something like that? I'm not sure I would be very willing.
I wouldn't be betting the house on it, but I'll probably have a little dabble. We'll wait and see. I'll read more about it when it actually goes live. But yeah, it'd be a pretty little dabble. Emphasis on little.
Yeah, it feels like quite a punt. Sort of, you've got to be because say a company like Dyson or something that's been, they're still a private company. I don't know, like plenty of companies just won't go public, and I don't know. I'm not sure how
that's
much
true. That's true. I guess it depends how far they develop it. I mean, the examples they use here are pretty enormous companies that I'm sure at some point will go public.
Yeah,
but
yeah. Well,
I guess the other
like
element,
SpaceX, that's definitely on the cards soon.
I mean, I don't think it really matters, but companies that are public, rather, they've got obligations to disclose to the world. Here's our profits. Here's our sales. To tell everyone everything. Whilst it's private, that isn't the case. So if we're having a go at this, we're kind of just working off the brand and what we can sort of get from things, and a little bit of, I guess, what the company wants to tell us. Whereas in a public market, there's just legal requirements. They've got to give certain amount of figures. In the US, that's quarterly. Here in Australia, it's 6 monthly. There are benefits. I mean, there are consumer or investor protections in being a public market that just aren't going to exist for this. But it's risk and reward, isn't it? So it's clearly riskier,
naturally.
but I guess there's the potential for upside. And I mean, there's plenty of things that are risky in the world. I mean, you could buy Dogecoin or something, I suppose. So perhaps this is less risky than some things,
Yeah, potentially.
Yeah. Well, look, I think we might wrap it up there. Look, thank you,
Alright.
Ethan, for jumping on and helping out at short notice. So for the listeners, I only
Thank you very much for
tapped
having me.
Ethan on the shoulder at about 3:00 this afternoon and said, "Hey, any chance you can jump on?" So he's come on at very short notice. So thank you, Buttercup. There, thank you for also.
Thank you very
giving,
much, Buttercup.
Yeah, Ethan, a bit of a pat on the back there. Much appreciated. Yeah, you've helped us out there. Next week we'll have. Financial Autonomy community member as a guest host, and we'll be doing that for a little while. So that's going to be a lot of fun. So look out for that. Of course, if you're watching this on YouTube, please make sure you hit the thumbs up button. Pop in a comment as well. We always like to see the comments. And if you haven't subscribed already, obviously do that. And for all the podcast listeners out there on the Financial Autonomy channel, thank you for listening once again. Really appreciate it. And it was great to get, when I sent that email out on Saturday, great to get so many responses. So wonderful to have such a great financial autonomy community. Really appreciative. And we'll see you next Monday. See you, Ethan.
See ya.